Thank you, Mr. Chairman and Commissioner. Always good to see you. I want to talk to you about telework policies. You and I have
Please.
discussed this before. And I understand that you all have a policy now of requiring people to work in office 50%.
That's correct.
Of the time. Now, what percentage of your employees are teleworking?
We are at the government-wide mandate of 50%.
So half of your employees are working 50% of the time.
I think the way to look at it is we have, at any given moment, the way to think about it is 50% of the IRS is working in a remote location and 50% of the IRS is working on site if you were randomly picked out a time.
Have you all evaluated whether teleworking enables employees to properly work without proper supervision?
That is a constant evaluation of ours in terms of, are we hitting our productivity goals? Like, are we answering the phones? Are we processing? Are we getting refunds out? All of the key fundamental mission critical things we have to do.
And y'all are about 2 years behind on refunds, right?
No, we are
No?
up to date. We actually had one of the best filing seasons
Okay.
we've ever had.
All right. Well, I was asking these questions about telework because of the tax court cases regarding Thomas E. Fields, an IRS revenue agent, and David Combs, and manager David Combs. They were backdating penalty approval forms during audits of partnerships in 2022. And Mr. Chairman, I've got a tax notes article to submit for the record.
Without objection, so ordered.
And I think that this type fraudulent activity taking place within the agency is important to be addressed, and I think it's important that you are doing something to ensure IRS employees are fired and removed when they are found to be in such violation of policy, and that they are properly reprimanded by their respective bar associations.
Yes, and look, with respect to the case you raised, we need to do better if we're going to build trust with the American people. We are acknowledging that we should have promptly corrected our representations in court in this case. I have instructed the IRS leadership team to take all the appropriate actions to make sure this never happens again, training, controls, and to the extent appropriate, personnel actions with those involved.
Okay, and I think it's important to note this happened during a teleworking time and without proper supervision. I want to talk to you, we've discussed before also, this issue of total positive income and the 400,000, what is going to happen with those audits. Now, in the American Families Plan Tax Compliance Agenda, and I've got that for the record, Mr. Chairman, Treasury pledged that audits wouldn't increase for taxpayers with incomes below $400,000 in actual income relative to recent levels. And one can assume that actual and taxable income would be the same thing, but the IRS has opted to use total positive income. That's the sum, according to what you all have said, the sum of all available income before deductions. And Congress has not established a statutory definition for total positive income. So let's have you clarify, what does TPI account for? Does it allow charitable deductions? If you are gifted money, is it included in that? If you get an insurance settlement or an inheritance, is it included in that TPI? Since there's that definition and then there's actual and taxable. So where are we on this?
I think as a general rule, you can assume that if it's income, it's included in total positive income. What we are trying to do is give a bright line, an easy way to understand how to distinguish. We believe our commitment of only increasing audit scrutiny on those above 400,000 is a high enough amount where middle, low income people around the country can breathe easier. knowing that they're likely never to.
My time has
yeah.
run out, but when you say general rule and assume, you know what happens when people end up going to court. So we're going to have to be more explicit, and I'll talk with you about it later.
Very, very good. Next in order